Alright guys, so this is the first video on the trading markets, or the markets crash course from Cashing and Capital, yeah. So video one, money markets. Basically we're going to be diving into the difference between investing and trading, how you actually make money, and what these charts are. So this website, what I'm on, is TradingView. You can get a free account, and that's number one what you're going to need. I'll attach everything in the comments under the video, what you're going to need, what we've addressed, links and everything, yeah. So technical analysis, fundamental analysis. This is how we analyze markets, basically. So when we're looking at a chart, this is a chart of a stock index. A stock index is basically a collection or a basket of stocks, so you're not just investing into one company. You can buy the actual stocks, you can buy contract for difference. There's a number of ways you can invest in stocks or trade stocks, okay? But this is just an example of a stock market over time. So this is the price action of the NASDAQ, which the ticker is QQQ, over time. So if you put some money in back here when the NASDAQ was worth, that's just for easy numbers, let's say 1,000, yeah, and you put 10 grand in, and then you just left it in since Jan 14, can't even get there, it's that much of an increase. So from Jan 14, and you took it out at the top, you can see there you've 8.8 times your money. So if you put 10 grand in, you'd have 88k. Yeah, that's if you bought at 10 and you sold right at the peak, give or take. Yeah, no one can actually time or do that to the exact peaks and troughs, but what we're pretty much doing is guessing what the market is going to do next. And the way you guess what markets are going to do next is you're guessing what everyone else is going to do. So you pretty much get paid for being a fortune teller and looking into the future. All right. So how do you actually make money out of these charts, and what do you do? So what we look at is, number one, technical analysis. I'm going to throw a couple of little bits in the description as well. So we look at things like trends, market structure, highs and lows. Yeah. So what we're looking at here is a chart. Each one of these candles, sticks, they're called on a chart, represents where price went within that day, because we've got it set to a daily setting. So over time, since January 21 to January, let's say November 21, so the end of the year, around about here, yeah, we've had a nice increase in price. When the market is trending upwards, so we're making higher highs, higher lows, and we're moving upwards, that's called a bull market. When we're trending downwards and we're making lower lows and the highs are failing to beat the other highs, that'd be called bearish. So for whatever period of time you're talking about, that's the trend. So when these lows started to get broken and confirmed we're failing to put in another high, the trend there swapped from bullish to bearish. If the market is literally just contained within a certain price, so let's say we made a high here and then all price is contained and not making a high or a low, that's called a range or consolidation, which basically means that the market's moving sideways. So the markets, what we're looking at here, we're basically looking at structure, market structure. So we understand these are candles and this contains price action. The wick of candles, so let's pick a couple of candles out, yeah, and then we'll get into how we trade things and what we're looking at. The wick means price travelled down but didn't spend a lot of time there, and it will quickly trade it back up. So if we pick this candle here, right, That means price that day opened at 668, 6688, give or take. It went all the way down to 64 at 6351, give or take, and it closed here. So if we split that day up there, the 23rd of Feb, and we looked at 4-hour candles or 2-hour candles, let's get this 23rd of Feb. Yeah, so that's split the day up. So yeah, so 23rd of Feb. Coming in there. Right, so we opened here, and then we dropped down, and then we closed back up, give or take. So that's a candle split up, give or take. A little bit of a shitty drawing. It might have been the 24th. No, I don't want that. I need to get TradingView Pro back. Change my cards. So yeah, so that's a candle. We've looked at market structure, higher highs, higher lows, and basically market trends. So the market at the minute is trending downwards at the present time. What we're always trying to do as traders or buyers, especially as buyers, we're trying to buy lows. So the don't get demonetized or any of that. That created a market low, and if you bought here, you'd have been riding up gains all the way up, nearly 3 times your money. So from down here to up here, this is what's good about TradingView. You can see all sorts of these different tools and things. You're trying to buy a low, and then you want price to shoot off from that, so you're making money. What people generally do, they might put, let's say you've got 10 grand, you might put some in here, roll some in, and as it's moving up, as you've nearly doubled your money, you can take your initial 10 grand out, and then you've got a free 10 grand. That 10 grand from there might half again to about 1500. You can scale out that extra 1500. You see what I mean? Then you've still got some money in, and you can gradually sell out if it starts to reverse on you on these pump highs. Yeah, and you average a good return, and then you can shuffle your money back in over a couple of years rather than just buying and holding it. It's literally like a few trades, but it's like swing investing. Yeah. So that's basically that. It's a little strategy you can do. So how do we actually make money from these markets? We've looked into investing, which is basically buying low, selling high. Yeah, and the things what make markets move are fundamentals, but also technicals. So technicals could be like things we look at are trend lines or trend line breaks, because traders have learned all this stuff from all these books, and they're thinking, right, I'm going to buy every time it gets on the trend line or whatever, or the rough trend. And when the trend breaks, we're going to reverse position. So like you could say that this has broke down from there, so people be thinking, oh shit, when it hits that trend line again, I'm going to start shorting it. I'm going to cover that high or the most recent high, whatever, because I'm expecting that to then hold, and then I'm going to expect this to just dump down. So someone might put a trade in there, stop loss there, so they don't just lose all the money if they get the trade wrong, and then they're increasing their money on the market going down, and you can make profits on the market going down. That would be called a short. You can do the same thing when it hits a low. You think, right, yeah, good time to buy, whatever. It's making these lows, it's whipped through, it's starting to move off. You could then think, right, I'm going to buy when it's this trend line, cover one of the lows over there somewhere, and I'm expecting the market just to pump off. So this would obviously be like a really long-term trade. But yeah, you could close it out when you've hit whatever, and that's taken a bit of time. The way you can trade opposed to actually just buy and sell is you use something called leverage. So that basically means that you're using someone else's money to turbocharge your trade. And we can go into that in another time. But that's basically what trading is. It's more betting on markets, and most of what you're pretty much trying to do is just find an edge of the market, and then you're trying to buy or sell to the other edge. You can trade on different time frames, so this is daily, so that trade there might take you a week. If you trade on smaller time frames, so like each candle is an hour, you know, you can be in and out within a couple of days or within the day. So you think, yeah, that's going to go there and it's going to go down there. That might be over a week or two. Not really the best one to show you on this, but let's go on some Forex. We can trade. If you caught that move, that's like an hour move. Yeah, so if you thought, right, for whatever reason, I like this little order block here, I think it's going to tag this low, this buy to sell there, it came and revisited that. When it comes into it, I'm going to look on an even lower time frame. I'm going to get on when it's confirmed that this is getting broken out of. I'm going to cover the low, and then that were an hour. So if you've wagered, you know, like £1,000 out of your pot, you've now got 7.65 grand minus fees if you closed out there, and that were over a day. So you can pretty much make 7 times your money in a day rather than investing and waiting. What people do tend to do is use trading to make a wage, because you make wins and losses, but over time, obviously, you're trying to make a wage. Then you can take some of the profits out and put into a slow burner, like a stock index or some crypto, for example. So say Bitcoin here, like Bitcoin's near a low. So from where price has been, price is pretty much now on sale. You know, it's a 76-77% sale. So this isn't like a terrible place to actually start buying from for different reasons. And we can go into market structure and all that sort of thing before. But round here is not a bad place to actually start to put your buys in. Even if it drops a little bit lower, you get your average over time as the market recovers. You know, you've averaged there, and say it pumps back up to here, yeah, and that might take, you know, 6 months, whatever. You could, from say 16k average, if you got anywhere near 32, you double, 48, you triple. You could triple your money within 6 months. Yeah, so the money you've been making all the way through here trading Forex or crypto or whatever, you could then roll in and pump here, and then that's making passive money. Obviously, there's no such thing as fully passive. You've got to watch it, and it can go wrong. But if you use good strategies and good risk management, you make money over time. So yeah, we'll end it there, so it's not going to bait your head too much, but that's number one, trading markets. Cool.